Welcome to the Big Announcement Coming Soon podcast. I'm your host, Michael Bohl, joined by my usual co-host, Jeff Renson, and our special guest today, all the way from Switzerland, the swinging David Collette. David, good to see you. How you doing?
Yeah, thanks. I'm pretty good.
I believe this is your third appearance on the show, which probably means you've been on the show more than me because I took a couple weeks off.
Snap. Yeah, I'll tell you how it goes. It's pretty good. I'll guide you through it.
We appreciate that. And you've got a special microphone going today. And then, Jeff, how are you doing fine this morning, of course?
I'm doing great. Good to see you guys.
All right. Well, let's get straight into the news. What news do you have for us today, Jeff?
First, on the run, we got 3AC, who they can't find Kyle Davis and Su Zhu after that 3AC meltdown. So they subpoenaed them through Twitter. They said that's the way that they're communicating out. And
interesting.
We don't know where they are, so that's how the subpoena was issued.
Are they hanging out with Kwon, or what's the deal?
Well, I don't think so. Kwon is the second guy who's on the run, but he was actually on the Laura Shin Unconfirmed show last night, or yesterday. That's when they aired it, I should say. It's
from his secret location.
Yep, and he cites personal safety and stuff. That's an interesting one to look at. There's some debate on, is there a red notice? What does that mean? Is there an Interpol warrant? What does that mean? I'm more interested in where the BTC, so then Bitcoin went to the LFG, one of the foundations supporting Terra. They say there's kind of a dispute of whether that was used properly to support the peg at the time, whether they kept some of that, and that's what's up for dispute right now. That's interesting. I mean, the Terra meltdown, it's done. So on to the next story, and then whether or not he's guilty of anything, I think really comes into what laws have to do with, I'm not sure, laws around creating a currency, because I never saw anything. I saw some bad decisions like funding the exchanges, but I didn't see fraud in Terra myself.
Right. Yeah. I mean, it was all legal, well and good, as long as he was making money. Now there's the political consideration of somebody's got to get him, somebody's got to pay, kind of thing.
Yeah, I agree with that. It's kind of like almost they arrested his COO or something like that, and then had to release him because they're like, yeah, we got to get him. And then I don't think they have anything because, yeah, I kind of agree. It's like they built kind of a casino and everyone played in the casino, but they all kind of did so on their own account, and then it blew up. And I don't know.
Yeah,
it's an interesting analogy. What if a casino completely goes down though? Then do we go after the CEO of that casino?
Yeah, probably do, but I don't think in the end he actually ends up paying. Right? No one ends up paying in the end. Yeah, there you go. Right.
So what's going to be the end game for that? I mean, there's this talk of of him trying to. Oh, I'm going to I'm going to do it again, and we're going to restart it. And I guess he could say, look, everything's fine. I'm going to come back. But at some point, he probably should just either going to be on the run permanently or turn himself in.
I think more so on the run from other people. There's a lot of people hurt from Terra.
Yes.
Regardless of how the law views it, I don't think he wants people to know what city he's in.
Yeah, especially not Su Zhu and those guys lost so much money because of Kwon. They're definitely not hanging out together.
Yeah. And then the second bit of news is Aptos, which I know David and I have talked about for a long time. They came out, new L1, no tokens, 4 billion valuation like a year ago. This is all announced for 6 months, and we said, well, that's a scam. And then this week, everybody said, hey, this thing seems like a scam. So the news on Aptos, and it's way down, it was all of VC held tokens for an L1, which was doing nothing. So it hadn't actually proven itself. At least, people trade Dogecoin, people trade Shiba Inu, it does something. More importantly, something we've done over the years, and big thanks to David for this, is go back to your Twitter feed and see who shilled Aptos, and cut them out, and see who told you 3 months ago Aptos was a scam, and keep listening to those people. So it's more of a good yardstick for who's somewhat honest in the space and who's on the take.
So how do you get a valuation real quick of that much money without a token? Like, how do you determine the valuation?
Well, they do have a token, but then they pre-mined it basically, and then gave it all to the foundation and stuff, so that like only people who can buy it, like the public got like 15% or something like that. So it's basically just like, we printed a bunch of money, bought it from ourselves, and now you can buy a valuation of this at super overpriced, because like everyone, they hold like, like $3.9 billion of token, and they're willing to sell 100 million of it to chumps.
Market cap's $1 billion now. So we're down from 4 billion to 1 billion in like 18 hours. So
Okay.
I can make 1 trillion tokens, throw it into an ETH pool, 1 token and 1 ETH, and then on Uniswap, and then that 1 token I've made with the 1 ETH in the pool makes the token worth, I think, 12.90 right now. And
But I
then
think
the trillion I hold makes me by far the wealthiest person in the world if I can dump them.
But didn't you say it was didn't you say it was a layer one? I mean, my understanding of layer one is it's own platform. It isn't attaching itself to ETH or whatever.
Sorry, I'm just giving you an example of how you can create valuation.
I see. So for those who are listening and are interested in creating a valuation of their own token,
yeah,
that's
any number
taking
you
care
want.
of that. I got you.
They just buy and sell it between friends until it gets ridiculously overpriced, and then bring in some chump and sell it to him.
Right.
But
well,
I mean,
you might
I think
be more than one chump, but yeah.
Yeah,
again,
exactly.
If you're following people on Twitter for financial advice, for investing direction, and they
or
were
listening to this podcast,
Aptos is great to jump into, stop following them. They were paid, they were in on the early rounds, or they just have a terrible view of the whole space.
Right. I would add a layer to that though, like, because I think like what we're discussing is like how it's essentially a big scam because it's in the bear market. But if this had launched in the bull market, it wouldn't be a scam at all. It'd be like VC-backed token is huge. Anyone get their hands on it, it would go to the moon. Like, you know, kind of like ICP token did, and its chart is amazingly crap. Like just.
ICP launched the bull market and went straight down.
Yeah, totally. But I mean, I think like nobody really.
I guess exactly, you got to be a big loser to lose in the bull market.
Yeah. I mean, but it's a good narrative, though. Like, the project does sound good. Like, it's DM spinoff from Facebook who paid all this money for this blockchain research and then couldn't do it. But then I think they just launched it really, really poorly. And,
if they launched it at, today they're at $1 billion. If they had just gone in kind of humbly and launched it at 100 million market cap with no working product, which I guess it broke the first day too, then we could say 100 million is worth the research and effort they put into it. Now, granted, there's still plenty of, every time I scroll through the top 100, I'm reminded there's plenty of crap that has no utility, no use at all, and still maintains a couple billion in valuation.
All right, Jeff, you have additional news as well, or is this your?
That's all the news for today.
All right, David, did you want to say something, or should we move on to?
Yeah, I just give one final point is that I think like this is kind of almost the end of a certain age. Like VC funding for huge projects that were worth billions and billions of dollars had kind of like a pointed time. Like first it was ICOs, then it was private funding VCs, and it was almost like this is like the worst launch at the worst time because actually what's coming next is like who's finding the gems that are worth like 50 million and might go to like 500 million, not buying like a 4 billion behemoth and thinking it'll go to like 40. I don't know what the upside is, but either way.
Right. And I don't think as humans we really understand the difference between 100 million and a billion. It's just a number.
Yeah, totally. And it's not worth that, so it's just
so that's interesting. All right, David, you want to talk about the EU? As you say, the article here says it passes MiCA legislation and crypto regulation breakthrough. So could you maybe explain what MiCA is? I think we probably know what legislation is.
Yeah, totally. Sounds good. I mean, to be honest, I don't know what it stands for, but with the EU.
I can tell you, it says right here, it stands for Markets and Crypto Assets Regulation. Now, why should we care about that?
That's awesome. Perfect. Well, it's essentially like Europe, as usual, is kind of like leading the way on kind of digital regulation. GDPR was kind of first. And then, so essentially it just basically is saying like, wow, this is a crazy market that has no rules. Let's apply some rules that apply to everything retroactively. So basically, if you're like a NIF, so if you're ApeCoin, which recently came up for problems because or Yuga Labs, which basically said, okay, all these apes which were selling perfectly fine as pictures are suddenly get rewarded with tokens for just you owning them, and therefore they're a security, essentially, is what the SEC is saying. I think the European legislation would back that up and say, yes, we agree. But they're not really going about it in such a way as like, okay, now you're going down and going to get sued. It's more kind of like, well, you're a security, so now you have to register with the securities exchange, which, essentially kills any chance.
So yeah, question about that. Are they saying things are security because there's just no other bucket available to throw it into?
Yeah, I mean, but it also
doesn't behave like a traditional security, right?
Well, it kind of does. I mean, that's the line, is because the security is promising you a return on your investment.
Negative or positive, but yeah.
Yeah, exactly. Like, but it's promising you a kickback, like
based on the efforts of somebody else. So if you just send money and do nothing, and Yuga creates value, that's what they're calling the security. if you're participating, right, it's not reliant on a third party, and that's where other NFT projects are trying to skirt the issue. But I think, yeah, exactly. David said you bought the ape, you got drop tokens, you were given value, and people bought the ape with the expectation of value for doing nothing on their own behalf.
Okay.
Yeah, as an investment. And so, yeah, exactly. So that's kind of like a problem for the Wild West of these kind of security issues. But I mean, I'll get to the kind of like the over under on it in a second. The second thing it does is that it looks at all the kind of exchanges and says, okay, who are your counterparties, and also who are you sending money to and receiving money from. So tighten up your KYC and specifically your AML.
Okay, so what's AML? So I understand KYC for know your customer. Okay,
exactly. Yeah. So you need to know essentially the person you're not just know who you're receiving money from, but know who you're sending money to, and that kind of causes issues for people who are definitely on the libertarian side of crypto, because you basically have to submit who you are to the system.
And that was one of the whole rallying cries, of course, for the crypto ecosphere, is that idea of anonymity is needed. Of course, we know where that can go, but yeah.
Yeah, exactly. I mean, and if you play it out to the nth degree, it is kind of like pretty crazy to think about. Like, okay, let's say you had your Bitcoin on Binance and it could only allow you to send it to your Coinbase wallet, which is attached to, let's say, even an offline wallet like Exodus. Like, okay, I could move my Bitcoin around, but you can only do it within sanctioned places. So you have kind of a captured ecosystem. It's almost a way to control Bitcoin from the outside in, because then, yeah, you can have your Bitcoin, but I know everything that you're doing with it on all places, because only sanctioned organizations will allow you to send it anywhere. And anytime you send it from out to within, it can never go out again. And so it starts to, it's like different kind of like challenges will be played on different fronts. So, but I mean, at the same time, it's hugely value creative because all the exchanges now have the rules. They know what they're going to have to, pay in fines or not pay in fines, and they can actually adhere to this. And the vast majority of people don't care. I don't care if my KYC and AML day to day is known for me, buying this, that, and whatever.
Well, isn't it the only way we're going to get mass adoption into anything is to have trust, and people don't trust things they don't understand, and they're more likely, depending on what country you're from, to trust something the government regulates.
Yeah. Exactly. Yeah. I mean, the speed of money is everything. So the easier it is for people to use, the better it is. They're not going to use like specific, okay, now take your money and send it to Monero and then like transfer it to this day, and don't use the same amounts both times to hide your funds. Like nobody does that. Except for maybe people who, once they reach a certain wealth, then decide, okay, crypto is a land where, I mean, we live in a world where the Cayman Islands and, there are crazy tax havens with the vast majority of the money in the world living in them. So it's kind of a people's version of that, if you will.
Yeah. So the flight, the flight of money will probably continue, just in this different form of it, or the flight of store of value, I guess.
Yeah, so the innovation is being pitted against regulation, and innovation usually wins because regulation is slow, and it'll just be like, pow, and then, okay, we'll go here this way.
Right, like Uber, for example.
I think the biggest problem, and I know Mike's going to talk about this with CBDCs, with all this KYC into your offline wallet, and I've talked in the past with Mike about the red tape, I think in the first few episodes, how many wallets do you have, how many need to be KYC? Will they step in like PayPal does, your bank does now, say, hold on, I'm going to stop this transaction because we can censor on the Ethereum blockchain. We don't know this wallet. And then you're like, well, I'm just trying to send money to myself. Anyway, the supervision part, a CBDC is going to lead them to supervise everything we do. Having full KYC, AML, every single wallet, and like you're saying, David, it's for the safety of everybody, but really it becomes to integrate it so that there is no unsupervised money. So everything you do can be viewed and put back into a data bank, and then they can start. The hope would be to extend controls into the blockchain like they would have in the CBDC. So as you transfer money to somebody else, they can knock your social credit score that we'll have, just like in China, we'll have everywhere soon. So I think that non-anonymity really, we have wallets with cash in them. The government doesn't need to be involved. The government doesn't need to be involved in any of this. Most of the AML KYC stuff doesn't stop terrorism. All they do is find large banks who openly fund terrorism and launder the money. This is only to control money for most of the population, and eventually to use that to control people.
I would think that's a little bit of a BS, that extension. Now, that it's going to control people. I think it's sure in an authoritarian
look what
country
they're doing
like
in China.
Yeah, China is a
Why
classic
won't they
example.
do that here?
But they've been wanting to do that since day one. That's always been any authoritarian
They
regimes
want to do that in America too. It's just too hard, and it's becoming easy.
I mean, who's they?
I know. I think that's the question, and that's the point. I think
anybody
Xi
who's
Jinping
interested
in China
power.
is the they. Okay, yeah, but it's a lot more difficult
see much
in
of
a democracy.
Right difference when it comes to the pursuit of acquisition of power over people.
But it's not. I would argue it's the they is not necessarily a person or a people or anything like that. It's I would argue it's economic, right? Essentially, if you can make a CBDC, if you can have all your KYC AML all nicely sorted, then you don't have to spend buttloads of money trying to like control all the leakage and the fraud and all these other things. But in addition to that, the key thing to juice an economy, you need to pull stuff out of the ground and then spin the money quicker. CBDCs juice the money flow and super quick, right? If you like America's payment systems super behind. If they could introduce a CBDC, it would just make it a lot quicker because yes, they control all that stuff, but that's not the reason they're doing it. They're doing it because of the money. But then basically, I would also argue that yeah, it's almost like China. It's kind of like what's the way to make a lot of money quickly? Centralized control, and that tends to be the argument always. It's kind of like how much control should we give away in order to earn more money? But yeah, I don't necessarily think. I think the they is almost like the social acceptance of what our culture is going to accept at whatever time in certain areas.
Yeah, you see America is sliding towards an authoritarian, the embrace of authoritarianism, especially on the right. You could say on the extreme left as well, but mostly on the right, and even the middle, the right of center people are starting to be more accepting of it. So yeah, you do see that slide. It's a gradual slide, but it's nothing close to what we see in China, which has always been based on that sort of regime. And so to say that automatically, just the whole point behind a CBDC is to be able to control the population seems crazy. It's like, so for example, in this article, the guy talks about that as well. He says could have sinister consequences for the U.S. should the government gain granular insight into Americans' everyday transactions, potentially directing them to favored public policies. Whether you might agree with some of those policies or you might not. Whatever.
In New York, remember they started banning the sizes of sodas you can buy, and they have different restrictive laws in California than they do in other states.
Right, and what happens to that? There's pushback
controlling every year.
Yeah, I think there's also pushback on a lot of that stuff as well.
Yeah, I think if they don't have direct control of your money currently. Look what happened in Canada with the truckers peacefully protesting, and then they seized the bank accounts. What happens when you don't need to go through the banks, and banks have their own, privacy and regulation?
Yeah, but there's institutions in process. There's institutions in process that is part of that right now. Now, those things could deteriorate. I'm a big believer in our institutions, and I think younger people maybe not so much, but.
I think
right. Or if they arrest you in your car, because that goes after the minority population that get arrested the most. Like it depends on who the group is. Group in power doesn't usually do that to itself.
Well,
but the people in power don't usually do those things to themselves.
I can
agree. It doesn't mean it's going to happen.
And I can say it just happened to me on one of my European crypto exchanges. They took my money and they said, we're not giving back to you until you prove how you got this because of this new MiCA rule. And so it literally kind of just happened. But that's not the point. Like the point more is all the now. I mean, that's kind of what I see on Twitter as well. It's really interesting you're living in Europe because you're kind of just. My dog is being told to go on a walk. Basically, like.
So it made me a quick reminder: turn off Alexa before I start flying. Okay, go on.
But yeah, it's interesting because I think in America there's such polarization towards certain tribal perspectives that there's very much animosity towards the other team, and there's the belief that the other team is going to do this to you or that to you or whatever. You live in Europe, it's a lot more kind of just like. And there's a lot of common sense rules and things like that going on here. So I think like this whole argument about where the money, like, I don't think it affects us now. If you look at like, I can't even like email my dentist in America and have them respond to me. I got to call them. Like America is so behind on its technology. There's no way it's tracking everything.
It's culture of the technology. Yeah. Well,
it's like 10 years away. But I would say this. if you were to say like, okay, if America is slipping towards authoritarianism, and like, let's say like, would you want all of your financials known by Trumpists, by whatever comes next, who then says, hey, how did you vote? And then why were you spending money on this? And, it's like, you never know what the future holds. And so I think the decisions that are being made now are not so more important to like the here and now, what they're going to do with this. And it's the much broader, what happens 20 years from now when people don't care about their KYC, which they never do, just like the internet browsing history and whatever.
No, I hear it. And 10 years ago, I would have disagreed with you. But as I watched the slide, I see you're right. Like it'd be fine now, but it might not be fine in 10 years for sure. But what is the difference between that, a CBDC, and credit cards? Like, I've outsourced my entire privacy to credit card companies instead.
There are some privacy laws. The government has to subpoena credit cards. Getting into the credit card system, they can't directly take money out, add money to your account. The government doesn't have control. Right?
So wouldn't it be the same with this CBDC? Because that's from your bank account. But aren't my CBDCs going to be held by Chase, for example, and then the government's going to have to subpoena that to get it? Like, what's the difference?
It would be like on a Fed wire. They talk about how it would be directly from the federal bank, which I guess the Fed is not the government.
Yes, no, it's not.
That private bank would issue it and have direct control.
Yeah. In theory, the private bank has an incentive not to rat on its users, or they'll leave the bank, but you cannot leave the CBDC. It's the dollar.
Yeah, I guess I just don't understand what the difference is between a dollar and a CBDC, other than just a dollar being it's just a way to transfer. Like, why is there a difference necessarily in the control of it? When I send money to you on Zelle or something in the U.S.,
that's in the U.S. bank system, as in U.S. Bank, the company, and Bank of America use Zelle through a third-party custodian.
Yeah, so what's the difference between that and a CBDC?
Yeah, it's interesting. You could actually... Yeah, this is a danger for banks. I mean, essentially in the future, Fed could just issue debt directly to the people. Like, and they're like, so how banks are like, oh yeah, I can borrow money from the Fed and get 3.5%. You go down to Wells Fargo, you're getting 0.2. Why is that? Because they don't actually need to lend to you because a lot of other reasons. But nonetheless, why can't you just get the money straight from the Fed? That's the sell for the CBDC. And most people just be like, sweet, yeah, I'll totally do that. Boom, done.
Yeah, but we should probably move on. But I can tell you that no banking lobby is going to allow that to happen. So it's not going to be.
That's why it was delayed, probably, right? It was delayed indefinitely, essentially.
So when I say they, it's the banking lobby who, like you said, people who can help push the agenda.
Sure, yeah, exactly. Like
I don't know. This all seems,
I
may be naive, and I'll admit to that. It just seems to border on conspiracy a little bit, which I'm always a little worried about when we start believing that. All right, so all right.
Conspiracy's in vogue now, Mike. Don't you know?
I do.
You don't have to believe in elections anymore. You can just say you won, and if you didn't win, it's not true.
All right, Jeff, you're talking about we reached another sad milestone in censorship, 51%. That means if the censoring validators would now stop attesting to non-censoring blocks, they would eventually form the canonical 100% censoring chain. What are you talking about here?
Okay, this took me a moment. This is ETH 2.0. We've gone to proof of stake and
versus proof of work.
Yes, and because of the actions against Tornado Cash, where they've said that anybody who's interacted with the Tornado Cash contract, you can block those addresses. So the hardest part for this, and this took me a lot of reading, is they took a lot of the terms. And I remember as you learn terms growing up, you think, well, why do we call it this? And it relates to something back. And in Latin, they use this term. In Old English, the so-and-so, for your last name. They just reuse these terms in ways that don't make sense. So now validators are not validators. They're miners and nodes. That took a while. I kept on wondering why the validator was doing all this miner work.
Miners and how do you spell that?
Flashbot is not the Flashbot. Flashbot, the registered, is a company called Flashbots, which does the work against what Flashbot, the smart contracts, used to do. This took me 2 hours of reading. Here's the quick look at it. Blocks are proposed now to validators from the memory pool. So it separates the person who builds the block and puts it in the blockchain. And that helps for a thing called a simple MEV called sandwiching, which is if I say I'm going to purchase something at a price with slippage, the person can put their own buy before mine, push the price up, I buy it higher, and then put their own sell right after, all within the same block. My transaction goes through, but part of that slippage goes to profit to the miner. So that would be like an MEV sandwiching maneuver.
So why?
I've got a better, not a better, that was a great example. I've got a simple example for our audience.
Yeah.
Let's say you had like a marketplace that opened at 8 o'clock. You have somebody run in at 7:59 or whatever, like a minute before, buys all the best produce, and then sets up his own stall and sells it as people are exiting. And so they essentially kind of robs the opportunity of everyone to have the free chance to get the best produce and makes money on the process.
Before they ran in, they interviewed everybody in line and said, "What are you buying?"
Yeah, exactly. Yeah, there you go.
So by separating proposers and the validators who make the block, they're hoping to de-incentivize this. And Flashbots, the company, is one of these proposers who takes Ethereum transactions from the memory pool and puts them in together, sends them to a validator, and doesn't do the MEV extraction. What they also
There's a neutral party.
Yeah,
they just build blocks, and they stop the blocks from being reorganized by smarter people than your average Joe, and tries to protect average Joe from smarter people from preying on them, essentially.
Yeah. They're playing nice for everybody. They're also doing something very important for the validator. So if you're an American validator, you have to comply with the OFAC regulations. You can't process the Tornado Cash, potentially non-AML KYC transactions. So these validators specifically go to Flashbots, and that's really where Flashbots makes their money on the back end, and says, give us OFAC compliant transactions, please. So Flashbots go to the memory pool, take everything, and censoring, they don't say no to other transactions, they just don't say yes to them. Because if you're a validator who's not in America, you can choose to get proposals from non-OFAC compliant proposers and then include these other transactions. So currently at 51%, you wait about twice as long. The danger is if all validators start pointing to these and enough validators reject blocks that aren't from relayers who are OFAC compliant, now we have pure censorship on ETH because of proof of stake. So I think that's where they're censoring Tornado Cash transactions. It is between two parties in a way that was meant to separate them, but they're working together to censor. There are people not participating, so blocks can go through, but that 51%, we're reaching that threshold where it's possible to steer the entire chain only to OFAC compliant validators. So I hope, does that sum up? You guys think what's going on with this?
Yeah, definitely.
So what's the implications? Why is this concerning? Or is it?
Yeah, definitely.
It gets into Tornado Cash basic privacy of, again, with the KYC AML, very much on the topic of today. If I get paid on the ETH network and I'd like to send it through Tornado Cash because I don't want my employer to see what I'm doing with my money or what money I have, or if I'm taking money from my brother and I don't want him to know that I don't need the money he owes me because I have plenty. And he says, well, I can see all your wallets.
Right.
I'd like to have him Tornado Cash it before he sends me the $20 that he owes me, and then keep the rest of the privacy to myself. But also, if I want to fund terrorism, you do it. But really,
But here's the
idea for that.
The basic argument of people deserve some level of privacy.
Yeah, but here's a more specific example that could happen in the future, for example. So let's say, I don't know, SEC says, you know what, we don't think that the marijuana industry is OFAC compliant. So anyone receiving money in cryptocurrency from those don't accept those blocks. And basically, if you do, which they've already kind of said, if you're in America, Ethereum is largely in America, so therefore it counts. If you're participating in clearing those blocks as a validator, which is what Jeff's saying, then you could be on the hook for that problem. And so most people would just be like, whatever, I don't care about that. I'll just do what the SEC says. And if enough people do that, then they can just essentially capture the chain and say, well, it only pushes OFAC compliant blocks. So therefore, in every transaction in the future, anyone joining the Ethereum network will have rules put upon them. Now, there's good and bad, obviously. Terrorism is a good example of that, but then it kind of also introduces the idea of the people who can use Ethereum will ultimately be only allowed to do so because the government grants them permission to do so. If the government wants to turn them off, they can.
Gotcha. Okay. Interesting. All right. Is our time just about up, or Jeff, you want to?
Right? Ethereum becomes fully testing. I guess we move to Aptos.
I mean, I think that's it. Like the innovation bleeds around it, so it's not like terrorists are not just be like, oh, I'll just jump over to this other chain and use that and whatever. Like so. It is a way, though, however, of kind of like organizing the chaos. So it does make the SEC feel better because they know that the blockchain at some point can be controlled by them if they need to. So I think that does actually provide room as well for further innovation. Hopefully a new mooning season before some of those rules actually start to pinch.
Good point. If you're a big U.S. corporation and you're going to participate in the most regulated one, you're not worried about your own personal privacy. So there is a good point for, as an investor, what are you interested in versus as a personal, your own personal liberty versus follow the money.
Right. There's liberty everywhere. And Ethereum doesn't own my liberty, but it can make me money.
All right. I think we can end on that note. David, Jeff, great to hang out with you again this morning. We'll see you. David, will we see you next week?
I don't know. Yeah, I'm celebrity guest, so
that's whatever as needed.
Not sure so about any
work on your
celebrities.
You work on your celebrity status, so you can be, go from celebrity guest to super celebrity guest to ultimate celebrity guest at some point.
Totally. Start my Patreon.
Yeah, there you go.
Still? Is a Patreon a thing?
Yeah, we can do a Patreon / David Collette.
Awesome.
All right, gentlemen. We'll see you later.
All right.